brings me on very nicely to point number 4, which is pulling the trigger. Now, we have 2 scenarios with pulling the trigger, or should I say problems with pulling the trigger. The first one is this: fear. Fear of pulling the trigger. The second one is, let's label it as keen, or basically meaning that you're pulling the trigger too often, you're too aggressive. Now for me, the biggest thing was this: I was far too aggressive with pulling the trigger, and in fact it still creeps up to me now and then. I'm a bit, too eager to get involved. I'm far more structured with the setups I take now, are far less active in terms of sitting there all day long trading. However, sometimes you're either one or the other. I find you're either this or that. You're either a little bit shy of pulling the trigger, or you're very over aggressive. And they're both kind of really as bad as each other, and they've got to be combated one way or another. So let's talk about number 1 first, which is fear. So what exactly is fear of pulling the trigger? Well, let's think of the scenario. You are in a trade and you have the kind of, the setup of, I've got my 1, I've got my 2, I've got my 3, and then I've got my trigger here. So, and there's my trade, right? So we're visualizing this. So we need to see these 3 boxes filled before we take the trades. We need to see, okay, whatever that may be, the hourly chart, or the stochastics on a 5, or whatever the hell it is, it doesn't matter. The next one we need to see, the next one we need to see. Right, then we get that, we need to take the trade. Let's look at that in that example again that we had before. So I pull down, I push through the lows, and then push back up, right? That's the kind of classic thing we'll be using. We've got the low here, and this is our point 1, this is our point 2, this is our point 3. So we've got to put a low in, we've got to break through the low, we've got to come back up through the low, right? Pretty simple strategy set up here that would work quite well. And the idea is that when we're at this point here, we're going to take the trade. Now the problem we have is if we see this, we get to the trading point, and maybe this is the last point, maybe we've got a bit of discretion with 10 ticks there, or maybe we just literally have to pull the trigger as soon as it comes through there. We don't do it. The fear catches us. For some reason, we see all these things lining up, we get all our ducks in a row, it looks fantastic, it looks like a great setup, it looks like it's going to be good, then all of a sudden, we freeze. We don't pull the trigger. Why is that? What is stopping us from pulling the trigger? What is stopping us from doing it? And you know what? Look at the look at the outcomes of this thing, guys. If we don't pull the trigger, we might get angry at ourselves, frustrated, we end up chasing. We end up buying the trade up here. The market rolls over, stops us out, carries on. You know the score. Or even worse, it doesn't seem worse, even worse, it carries on and gives us a good profit. And why is that worse? Because that is reinforcing the bad behavior of not pulling the trigger when you said you were going to pull the trigger. So that's what's happening. We know what the cause, and we know what actually happens when we do that, and kind of what it's all about. But what is the reason we're not pulling the trigger? What is the fear? Now this is kind of my take on it, and again, people are different, and people are going to look at this in different ways and different manners. But this is, from speaking to the guys who struggle with this, this is what I think is happening. Going back to this bad analogy of the claw machine where you put your pound coin in, do you feel fear? I mean, I'm guessing here that if you're watching this, a pound isn't really that much money to you. If you're watching this and you're trading CFDs, a pound, you're happy to put a pound in a machine for a little bit of entertainment, or for the chance of winning a bear for your son, daughter, whatever it may be. That seems to be pretty obvious. So if you're trading pound US dollar, a US dollar yen, something like that, and you risk a pound on the trade, are you even concerned about it? If you get this scenario, it's looking worse every time, if you get that as your trigger point, are you going to be hesitant about staking a pound coin on that trade? You're not, are you? Because a pound means nothing to you, not concerned. Now let's ramp that right up and say, are you going to be concerned about sticking 100 grand on that trade? Now, for most of us watching, 100 grand on one trade risk is going to be too much. There's going to be maybe a few of you out there who are quite comfortable with that, and that's fine. You need to bring up to your level whatever your account size is and net worth is, etc. But you see my point. You've got a low point and a high point. That's meaningless. That's meaningful. As you kind of go a little bit lower, you kind of go, okay, £1, 5, 10, 15, 20, 100, 200, 500, 1,000. 5,000, okay, somewhere between those two. For most people, that's going to be where it's meaningful. So what actually does that mean? It means that if it becomes too much of a concern, the loss becomes a concern. It goes back to point 3 here, accepting the risk. We may well hesitate to pull the trigger because our defense mechanism in our sort of chimp mind is saying, whoa, I might lose money. I might lose 500 quid. I don't really want to lose 500 quid. And then you say, no, but we're trading. I don't lose 500 quid. That's when you're trading too much. So a quick fix for this is to knock it down and say, okay, are you happy with losing £100? Well, yeah, 100 quid, I can do with that. All right, trade that for a bit. And then you step up and say, what about 150? Yeah, I'm happy with that. What about 200? Yeah, I'm okay. 250? Yeah. 3? Yeah. 350? Oh, 350. So you're going up the scale as you trade, and you get to the point where, you know what, I don't want to, I feel a little bit cautious about pulling the trigger here because I don't want to lose 350, or whatever the number may be for you, like £3.5 grand, like 35,000. I don't know. You'll find the number yourself. Or just a bit concerned about losing. I don't really want to lose that amount of money in the trade. It's a little bit too much, and then back it off. So if that was 3 grand, you back it off to 2 grand. You say, no, you happy with 2 grand loss on the trade? Yeah, I am. Okay. There's your level. There's your comfort zone. That's what you've got to work with. And then you kind of try and stretch it out. And again, that's something for later on. But that will stop you from being fearful of pulling the trigger because you're accepting the risk. Going back to this point here, you're accepting that it's going to be whatever what we're using, for example. I think we flipped from £350 to 3 grand, whatever it may be. We're accepting that the risk on this trade is, let's use that initial example, £350, and we're comfortable with that. As soon as it goes above that level, we start going, that's a little bit more than I thought. I'm not comfortable with it, and then we may well have to fear pulling the trigger come in. And the problem with that is we don't give ourselves any chance to become a better trader from it because we're scared of pulling the trigger. We don't get the data from this strategy and the setup that we've got to work with and improve from. And we're just flying from the seat of our pants. We'll never improve from it. So we've got to get to a position where whatever happens, we're pulling the trigger. We need to be pulling the trigger every time a setup that we've created and devised occurs.